Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this educational presentation where today I want to discuss the one question a trader should never ask. I know it sounds kind of different from what we usually go into, but trust me, every trader has asked this question at one point or another. And in fact, this question is actually drilled into us in terms of it's something taught that we should actually be pursuing as traders. It's something that we should ask. But in my opinion, it's actually what leads most traders down the path of being unsuccessful, down the path of losing money. So this is the one question we're going to talk about today that traders should not ask at all. But on top of that, there actually are some questions that you should be asking as a trader. And so I'm going to show you what those questions are on top of that. So this promises to be a great educational presentation. Thanks for joining us today. My name is Stephen Primo, president and founder of Specialist Trading. I've been trading now for 46 years. I started my career on the floor of the Pacific Stock Exchange where I was a specialist. That's where we get the name Specialist Trading. Specialist is someone who made markets in roughly about 50 or 60 stocks. If you wanted to buy or sell a particular stock, the floor broker had to walk up to the trader who specialized in making a market. So another term for that would be called a market maker. I did that for roughly 9 years on the floor. I traded through the crash of '87 and the bull market that followed. And so I've traded just about every market environment, traded just about every system, every strategy you can think of. And so about 13 years ago, I teamed up with Pro Trader Strategies, where we formulated Specialist Trading with one goal in mind, and that was simply to educate traders. And you'll see that in today's educational presentation. Now, what I'd like to do today is a little bit something different. I know I usually ask for questions at the very end or for participation of the attendees at the end of the presentation. But today, since we're going to be talking about that question, I'd like you to respond. Just go to the either the chat box or the question and answer box and just type in what you think is the one question that a trader should never ask. And don't worry, I won't mention any names or who's asking. We'll just go over and see what most people are thinking. Most people respond, and then we'll give you the correct answer, okay? Now, before we begin, as always, we are first required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using a particular technique today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you haven't done so already, please, I invite each and every one of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. I post different information on a daily basis, lots of great free education, signals that our strategies have generated, as well as little bits of financial wisdom. Lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now, remember, as I stated, we first started Specialist Trading with one goal in mind, and that was simply to educate traders so that you could make your own decisions. So that goes a lot into what we're going to be talking about today. That goes into a lot about what this question is, because remember, most traders take themselves out of the game. So what we want to do is put you back in the game. We want you to make your own trading decisions. As I say every week, my goal is not to force feed you signals, not to trade for you, not to tell you what the best market is, but to tell you and teach you how to trade with the specialist edge. Now, 46 years ago, when I first started trading on the floor of the Pacific Stock Exchange, I struggled tremendously. And I did most likely the exact same things that many of you have done or are currently doing. So what I want to do today is really focus on educating you so that you can be put back in the game, okay? Now, remember, I asked you at the beginning of the presentation what you think that question is that you should never ask as a trader. This is actually leading or actually putting you on the correct road to being not bankrupt, but to losing a large amount of money. And some of you have responded. One of you says, what broker do you like? Okay, well, that's close to it, but that's not the question I was asking. Another one is saying, hold on, if I can read this correctly. He's saying, no, it's not the same thing. I don't want to give this away, so I'll go to the next one. That is the correct answer. Someone actually did give me the correct answer. Let's go a little bit. Let me take a few more, okay? Someone is saying, what particular platform do you use? Oh, that's a good question. That wasn't the one I was thinking of in terms of, but that is a prominent question. But The other questions are along the same lines, but one person did get it right. So let's go forward and I'll explain to you exactly what I mean. Let's begin. And once again, what is the one question a trader should never ask? And that is this: what do you think of the market? So the person who answered that correctly should give themselves a pat on the back. Now, I know a lot of you are saying, what's so wrong about asking that? I ask that every day. I ask that a lot to the traders. I've been taught that that's what we're supposed to ask, right? I know I was taught the exact same thing 4 decades ago myself. I used to ask traders all the time. But there's really a fault in asking that question, okay? We don't ever want to ask anyone what they think of the market. Why? Because when you ask someone what they think about the market, what you are basically saying to the other traders and to the market itself as well as this, and that's, I don't know what to do. You see, think of it. When you're asking someone what you think the market is going to do, it's almost like you see these gamblers at the racetrack saying, hey, who do you like in the fifth? All right? What horse do you like? That's really coming from a gambling and losing mentality. It's basically saying, I have no conviction and no belief or no real strength in what I'm thinking about doing. So you tell me what you think and I'll do the same thing. Now, even though you say to yourself, well, then I don't do that. I must be a good trader because I never ask anyone what they think. But think about it. When you go to read a blog every morning to see what someone is suggesting, aren't you basically saying, I don't know what to do. Let me get the answers from you. Let me see what you think. When you listen to the guys on TV talking about what they think the market did that day or what it's going to do that day, aren't you basically saying, I don't really know what to do. Let me listen to these guys. They should give me a good answer, right? Now, once again, this is really a recipe for disaster to have your mind set like this. Because as I've said before, think of an airline pilot asking his passengers, hey, what do you think I should do in terms of landing this airplane? Or think of a brain surgeon asking, hey, how do you think I should operate? What do you think I should do? Remember, it's no different from saying, what do you think of the market? The only trouble is this is your hard-earned money. This is what you saved up for. This is what you're trying to become a success at. And when you say these things, once again, you're saying to other traders and to the market itself, I don't know what to do. And you should never be in that position. Just as a brain surgeon should never be in the position of saying, I don't know what to do. Or a lawyer should never be saying, I don't really know what to do here. Or an athlete on the courts should not be saying, well, I don't know what to do. Or an airline pilot should never be saying, I really don't know what to do. But for some reason, traders think it's okay to do this. It's not. This is going to lead down to a road of you losing money. You have to be confident and have a plan already in place so that you'll never have to ask that question. So in order to be consistent, here are the questions you must ask. And you must ask yourself these 4 questions prior to pulling the trigger on any trade. And these 4 questions, I feel, will really help you take your trade or your trading to the next level. You can actually apply them to any strategy you're currently using. If you don't have a strategy, we're going to talk about how you can get one at a great discount later on in the presentation. But let me share with you the actual 4 questions you should be asking, okay? And you should be asking yourself. Now let's look at this example right here. This is an older chart of Adobe, all right? Get used to this chart because we're going to be looking at this a lot. All right, this is where a trader would look at this and say, hey, what do you think of this market? What do you think I should do here? It's kind of going up, going back down, going up. What do you think? All right. Once again, you should never be asking that question. So here are the questions you should be asking yourself. And you should be asking yourself, not someone else. Question number 1, am I on the right side of the market? Now, sure, trading 101, everyone thinks they're on the right side of the market. But if that's true, if that's so simple, why do 85% of all traders fail? Remember, you're only losing money when you're on the wrong side of the market. When you buy and the market goes down, you're on the wrong side. When you sell or go short and the market goes up, you're on the wrong side. And 85% of traders fail. So obviously they're on the wrong side. So you have to get on the right side. You have to get in sync with what the market wants to do. That's question number 1. So as we look at this chart of Adobe again, and you ask yourself, well, what do you think I should do? What do you think of the market here? It's going up, going down, going back up. Here's how you'll never have to ask that again. If you think you're in a downtrend, no. You're actually in an uptrend. Now, how do we know that? We apply the 50-period simple moving average. That's called our buy-sell line. It tells us whether we should be a buyer or a seller. It's that simple. And here's what you do. Once you apply the 50-period moving average to any market, any time frame, ask yourself, where is price in relation to that 50-period moving average? If price is below, then that means the overall trend is down and you want to be a seller. So you'll never have to ask anyone, hey, what do you think of the market? Because you know right away. Now, in this case, price is above. So the overall trend is up. That means you should have a buyer's bias. So right off the bat, you never have to ask anyone what they think of the market. Apply the 50-period moving average if it's the S&P, if it's a 5-minute chart of Apple, if it's a monthly chart of crypto, it makes no difference. And you'll always know what the market wants to do, and you'll know what you think of the market. You'll never have to ask anyone. So now in this instance here, we know that the overall trend is up, so we want to be a buyer. So there's no even instance of thinking of going short. I don't care what some guy on TV says. I don't care what the earnings estimates are. The market is telling you it wants to go higher. So you know automatically without asking anyone that you should have a buyer's bias. Okay, so you say to yourself, all right, well, I'm a student of candlesticks, and I see right here there's a bullish engulfing pattern. So I'm going to go long this, all right? Since Steve says it's above the 50 and the overall trend is up, I'm in sync with the overall trend, but I won't go long till we trade above like right here. Okay, that's a good plan for entry. Now we go on to question number 2. Where do I place my initial stop? Now, most traders say, well, Steve, I kind of figure that out as I go along. You know, if I see it's not working out, I sell at the market, or I pick a place where it's not looking that good. Once again, recipe for disaster. You need to know where you're going to be getting out if you're wrong, even before you pull the trigger. Every time I trade, I had a couple of trades this morning. One was a winner, one was a loss. Before I even went to each trade, I already had my stop order in. I already knew in advance where I'm getting out if I'm wrong before I even was in the trade. Okay? So in our courses, we have upwards of 6 or 7 different stop placements: conservative, aggressive, very normalized stop placement, different ways to determine how much risk you want to have. Let's use a very standard and generic one. That's called the most recent low, or a pivot low, as we see right here. A pivot low is where you make this kind of 3-bar pattern. We have bar number 1 closes low, bar number 2 closes lower, and bar number 3 closes higher. So you create this kind of a V. So if you're going to be getting in somewhere around here, you go back in time and find that most recent pivot low, and that's where you place your stop. Now, I know a lot of traders will say, well, why do I need to know my stop so soon? I don't understand. Why do I need to know that? Well, it's going to help us with question number 3. And question number 3 is what most traders think about first. What is my profit target? I mean, think of it. We're always taught, well, where are you going to get out with a profit? How much money do you plan on making on this? That actually should be 3rd on your list, okay? And so why did we care about finding out where our stop was before we wanted to know how much profit we're going to make? Because that question number 2 will help us determine the answer to question number 3. Let me show you what I mean here. All right, we're thinking about entering if we trade above here. If we're wrong and we buy and it goes straight down, we're going to get out here with a loss. Now, how many points would that be? If I entered right here and got stopped out right here, that would come out to 11.25 points. So you say to yourself, am I willing to risk 11.25 points? You look at your account and you say, I have a small account. That's too much. I mean, I can't even buy much of an odd lot there. It wouldn't be worth it. So you can automatically know, I don't take this trade. You see how this can, you're making your own decisions. No one's telling you, well, I think this is going to go up higher. You have to buy, you have to sell. You're already in charge of your trading. All right. Now, well, let's say you look at this and you say, hey, yeah, I can afford 11.25 points. Could buy a couple hundred shares, maybe 500. That's fine with me. I got a big enough account size. Or maybe you're saying to yourself, hey, I can risk 11.25 points. I'm going to buy those calls, or maybe I'm going to buy that spread. And if it gets down to that point, I won't be losing that much money on the options. Either way, your decision, you're making the decision, not some guy on TV, not even some guy on a webinar. You are in charge. Okay, so you know what your risk is, 11.25 points. So what you want to do is, since you're risking that amount, you want to double that. So you double 11 and a quarter, which comes out to 22 and a half, and you add that amount onto where you would be buying. This means if you make that target point, that target level, you will be making twice what you risk, and that's called a good risk-reward ratio. If you want to be able to be consistent, you always want to be able to make at least twice what you're risking. So this automatically puts you in the game. So you're making twice what you're risking if the trade works out successfully. So you would be basically exiting the trade at 247. So before you even entered, you know where to buy. You place the limit here, or you're watching at the market to buy. You have a stop placement right here, and you have an exit. So you already have your plan in place without asking anyone, what should I do? I don't know what to do. I don't have enough confidence. I don't have enough experience. You must know better than I do, right? You see how little self-esteem those questions seem when traders trade that way? But that's the way 90% of all traders trade. They ask for someone else to tell them what to do, myself included. You have to be in charge. You can learn from others like you're learning today, but ultimately you have to decide how you want to put the plan in place, all right? Now, we come to the fourth and final question. How do I protect my profits? Because this is the worst feeling a trader can have. Having a successful trade, you're not out yet, and then midway through the trade, something happens, the environment changes, and all of a sudden that profitable trade on paper turns into a big loss. It's the worst feeling. I know personally, I at times would rather have a trade that lost right off the bat than to know that I was in a profitable trade and I didn't follow my rules, and then I wake up the next day and I'm losing a lot of money. So how do I protect it so that we can alleviate that many of the times? Well, we use what we call our 50% rule, all right? So what does this mean? Well, we know where we're going to get in, which is 224 and a half. We know where we're going to get out, which is 247. So we want to calculate half the distance from buying to exiting, and that would be right here. This is called the 50% rule. It's really a suggestion because, once again, it's up to you to decide if you want to apply this. So what this says is that if price gets up to this level or somewhere close to or touching it, you should cancel your stop right here and move it to unchanged. This will mean that once we're at this level, if something happens and it turns around drastically, at least you didn't lose any money. You protected yourself, and nothing gained, nothing lost, but you did not have a sleepless night because you had a profit and now you have a big loss. So as we watch this, we watch the trade unfold. Nothing happened the next day, but look what happened. We finally got long a day or two later, and it's starting to go our way. We're feeling pretty good about this. And right here, we got close to or touched, intersected this. It doesn't have to close above. In fact, it doesn't even have to touch the exact 50% level. If it gets close enough, it's up to you. But at this point, what are we doing? We are canceling our stop right here. We don't want to keep it down this low. We're canceling it and moving it to the entry price. This way, if something happens and it turns around, we're going to break even at the very least. It's called playing with the house money. You're not risking anything, okay? So now the only thing left to do is to watch the trade unfold. This is what I often say to my new students. They think that trading is supposed to be really exciting and intense and sexy and screaming and yelling and 2 phones in each ear, 10 markets watching at a time, multiple platforms and multiple screens, watching 2 or 3 TV informational channels. That's silly. I personally half the time have music on. I'm watching one screen here and trading one market at a time. My mentors told me the same thing I'm going to be telling you. If you are trading correctly, it's like fishing. It's very boring. You just simply sit on the boat, you cast your line, and you wait. That's the way correct trading should be. It should not be intense. It should not be scary. It should not be yelling and screaming. It's very, very logical and very boring, to put it bluntly. So you just sit back and watch. You have an order here to sell. You have an order here to get out if you're wrong, a stop order, and there's nothing to do. You just sit and wait. In fact, you don't even have to watch it. You can go out and do things, whatever you want to do. Go to a movie, do something else, but there's no reason to be watching this because the trade will manage itself. You've already got the guidelines in and the barometers, and ultimately, guess what? You got out with a 22.5 point gain. That's how simple trading can be. And everything here was done off of your decision based off this simple plan. Now, we have numerous plans at Specialist Trading and Pro Trader Strategies for you to choose from and for you to decide how you want to implement and how you want to edit and how you want to change up to meet your risk parameters. This is the way trading should be. No two traders should ever trade alike. Should never go to a website and get a signal service and say, buy here, sell here, place your stop here. That's silly. That's why most traders fail. You're taking yourself out of the game and you're almost assuring yourself that you will lose. You have to be in charge because everyone has different emotions going in. Everyone has a different size account. Everyone has different risk aversion. If I had a $250,000 account, I'm not going to be asking someone with a $3,000 account to take a 25-point risk. That's silly. They couldn't even afford an odd lot. So there's no way two traders can trade alike. So now you have this example. Let's go through another one, okay? And show you exactly how you could trade without asking anyone what they think. All right, here's an older chart of FSLR. All right, you say to yourself, hey, what do you think of this market? It was going up, but now it's going down. I don't like it at all. But a guy on TV doesn't like it. But what do you think? And then your brother-in-law down the street says, hey, you know what? I study technical analysis, and this is a really bullish wedge here. This is a very positive pattern. All right. What this means is when it breaks above, you have to buy. So I think you should buy this thing once it breaks above. All right. So you have a guy on TV that doesn't like this, that you asked him what he likes or doesn't like, and he says he doesn't like it. You have your brother-in-law down the street who likes this. He says it's a bullish wedge, a very positive pattern. So now you're kind of in the middle, but you figure you're going to follow your brother-in-law. So you watch this, and guess what? The next day it closes above, just like he said. You call him and he said, yeah, I bought it. You got to buy this too. So you decide to get in there and you buy. You're all excited. You think it's going to make new highs. Your brother-in-law says you're both going to be celebrating. Okay. We go to question number 1. Everything I did here was wrong. Everything. Even though the guy who has 50 years experience on TV is saying he doesn't like it, and another guy is saying he likes it, your brother-in-law, it doesn't matter what their experience level is. It doesn't matter how much money they have. You should never ask anyone what they think. How to answer those questions is by applying this process. Question number 1, am I on the right side of the market? Now, apparently, you thought you were on the right side of the market because it broke this little bullish wedge here. But how do we determine that? We apply the 50-period moving average. And then once we apply it, we ask ourselves, where is price in relation to that 50-period moving average? Now, price was originally above for about 5 or 6 bars, but then look what happened. 1, 2, 3, 4, 5, 6, 7 bars have consecutively closed below. That's more than enough to tell us that the overall trend is down. Now, if the overall trend is down, do we want to be a buyer? Absolutely not. So there's no reason to ask anyone because you already know I'm not buying this. The odds are in my favor that this wants to go lower. Now, let's say you had bought this. Well, remember, we don't want to, but let's just say you had. Well, look what happened. In the next 2 days, you would have been asking yourself, hey, did I make the right decision? Maybe I shouldn't be buying this thing. All right. So now that we know in advance what side you should be on, if you're in sync with the market, so we want to look for selling opportunities. And let's say you like to look at trend lines or support and resistance. And you say to yourself, okay, well, we're below the 50 and there's some support right here. Because I study support and resistance, you say to yourself. So if we break the support, I'm going to sell. Okay, now that's up to you. Remember, you're in charge. I personally don't trade support and resistance. I don't believe in it, but it's up to you. If you feel at least you're on the right side of the market. Okay, so you're in sync with question number 1, which brings us to question number 2. Where do I place my initial stop? Remember, we have numerous ways to protect yourself. Let's use the standard generic one. We go back in time. If you're going to be entering somewhere around here on the next bar or so, go back and see where the last short-term high was or pivot high. And that would be right back here. You have a high followed by a higher high and a lower high. That creates this kind of an arrow approach, okay? So you place your stop there. Now, if this is too far, if this is too much distance, too much risk, you say to yourself, okay, well, it's too much for me. I'm not going to take this. But if it's okay, then it's okay to take the trade. Now we go to question number 3. What is my profit target? And the way we determine that is by looking at how many points we were willing to risk. Now, if we're going to be entering to go short here, buying the puts, going short the stock, whatever, and we're going to be exiting here if we're absolutely wrong, how many points will I lose? Well, you add it up and it comes out to 8.20 points. So that's enough. You can take this trade. You're willing to risk that with your risk amount, and you can sleep well at night knowing you lost 8.20 points with how many shares you have. So you say to yourself, okay, I'm in this trade if it goes down, but where am I getting out? Well, now we simply double this. All right, so 8.20 times 2 is 16.40. And now, since we're going short and we're looking for a profit target, we subtract that amount, 16.40, and that's where we're going to determine where to exit, right here. That would be our exit level, 51.15. So now we know that we're going to be entering here to go short. Once it trades at 67.55, we'll place a stop up here, roughly about 75.55 or so, and we'll place a limit to enter, or to, I should say, to cover our short at 51.15. We have everything planned out so far, and we haven't even gotten into the trade yet. See how you're in charge of your trading for the very first time. You did all this on your own without even having to ask anyone what they thought of the market. Now, this does not guarantee it's going to work out. It doesn't guarantee you're going to have a profit, but you're putting the odds in your favor. Which leads us to the fourth and final question, which is, how do I protect my profits? What if it's going in my direction? What if it's going lower? And all of a sudden, I see that it turns into a loss. Well, we use, once again, the 50% rule. We measure the distance from where we started to get in short to where we would get out with a profit, and we divide by 2, and that gives us our 50% level, okay? Now, if price comes close to or touches this, it's your discretion. You would simply cancel this stop up here and move it to unchanged. So let's see how this worked out, okay? Well, the next day you got in short, and it's going in your favor. It continues to go in your favor, and in 3 days, excuse me, you're already at the 50% level. You're saying to yourself, wow, this is great. Now, a lot of our students say, hey, listen, Steve, I like to trade 200 shares at a time, or maybe two contracts. Maybe I bought 2 puts. That's fine. What a lot of students do is, once it gets to the 50% level, they'll sell one, or they'll get out of one position, and they'll keep one. But either way, whatever they have left, they'll cancel this stop and move it to the entry price. So even if you just had 1 lot to begin with, you would move your stop here. And if you had 2, well, you'd sell partially right here, take a small gain. And if this didn't work out and went back, at least on the second lot, you would break even, but at least you'd have a profit on the first half of your position. So let's see what happens. You've moved your stop to entry. You're not risking anything at all. You've protected your profit. And now the only thing left to do is to watch the trade unfold. Remember, trading is simple. It is the trader who makes it more complicated and intense than it has to be. So we just sit back and watch. In fact, you don't even have to watch if you don't want to. You can just, every day at the close, see what happened. And ultimately, we got there and made a 16.40 point gain on going short. Okay, let's review what we taught you today. These are the 4 steps to consistency. These are 4 questions you must ask yourself, and ask yourself, not ask anyone, not ask some guy who lives down the street or someone in a webinar. Ask yourself these questions. And it doesn't matter what strategy you're trading. The first one is, am I on the right side of the market? Okay, let's say your strategy is based on fundamental news. That's fine. We're not going to tell anyone how or how not to trade. If you want to base any of your methods on news, that's fine. They're not required at specialist trading. But let's say you're basing them on earnings, okay? And the earnings come out, and it's a really good earnings estimate. You say to yourself, hey, this is a buy signal. If that bar chart where the earnings came out on the daily bar is below the 50-period moving average, the odds are against you that it's going to work out. Trust me, I've seen this for 46 years. I use this in all my trading. So I would not buy anything below the 50, and I would not, whatever your strategy is, sell anything above the 50, because you've automatically gone against what the market wants to do. Remember, you want to be on the right side of the market. If you buy something and it goes down, you're on the wrong side. If you sell something and it goes up, most likely you're on the wrong side. Okay, so you simply add the 50-period moving average. Question number 2, where do I place my initial stop? If you become a student of mine, we'll teach you all the different stop placements, conservative, aggressive, but the most standard and basic one is just go back in time and find that short-term low if you're getting long, or that short-term high if you're going short. Extremely simple, and that's your initial stop. So this brings us to the next question, was what is my profit target? Well, you simply double your risk amount. So if you're risking 5 points, then you want to double that, and your profit level is at a 10-point gain, whether you're going long or short. If you're risking 2 points, you double that, and your profit level will be at 4. Okay, it's that simple. If you are consistently making twice what you're losing, you'll be that much ahead of the game, and you'll be a consistent trader. Finally, how do I protect my profits? By applying the 50% rule. This is a requirement we ask all of our students that are beginning any of our courses to use the 50% rule, because this way you can protect yourself. And this way, we don't want you, if you happen to get in a bad market, or if it's in a series of losses, that you say to yourself, hey, this stuff isn't working, I can't believe it. That way you're protecting your profit. It's a great way. I use this in all of my trading, and sometimes I come out with winners, sometimes I come out with small losses, but either way, I'm protecting my profits by applying this. And lastly, please never, ever ask anyone, whether you think you're not asking, whether you think, well, I'm just reading what someone wrote in a blog this morning, or I'm not really asking anyone, I'm just listening to this guy on TV. Whether you know it or not, what you're saying is, what do you think of the market? I stopped looking at news over 4 decades ago. I don't care what the news is, and I still trade every day. Someone said, but how can you do that? What if it goes against you? When you use sound things that have stood through the test of time, the odds are in your favor, okay? So there's really no need to do that. If you want to, that's fine, but never ask anyone else. You should have a plan in place. If you think it's okay to ask, well, then think of that next time you're in a plane, and the airline pilot comes over the intercom and says, hey, what do you think of me landing the plane this way? How do you think I should land it? And then you'll think twice about asking that very same question with your own hard-earned money. Now, would you like to trade a strategy that incorporates all 4 of these questions? I know a lot of you have emailed me in the past and said, Steve, I love what you teach here, but I don't have a strategy. I can't apply this because I don't really have a method yet. I don't know what to base my buys and sells off of. Here is a great way to answer all of those questions. We have a great special discount for all of you attending today. This is our strategy number 4 course, okay? It's a very special course. Why? Because it was the first strategy my mentors taught me over 4 decades ago, and a strategy I continue to use to this day. You'll get instant course access, detailed instruction. And remember I told you about all the different entries, exits, and stop placements? Well, you'll learn all of those within the course. You'll get educational signal alerts. These are alerts for you to learn, because this is based off a pattern. Strategy number 4 is a pattern recognition strategy. And so the educational signal alerts are there for you to learn how to identify them. You'll get the complete course rules, a conservative as well as an aggressive version. So once again, the highlights of strategy 4, it's a pattern recognition strategy designed for traders looking to catch momentum. And it only uses one indicator. And you already know what that is. It's the 50-period moving average, because that tells us whether we're going to be a buyer or a seller. Now, let me share with you some recent strategy 4 examples if you're not convinced yet about this great offer. Here's a buy signal, I would say about 2 weeks ago in ABNB, all right? Buy signal was generated. Look what happened 3 days later. Now, using the technique I shared with you today, just asking those 4 questions, you would have exited here, you would have known where to place your stop, and you would have had a nice 22-point gain in roughly about 3 days. And look what happened after that, okay? Let's look at this example in Costco. Here's a sell signal going back just a couple of months, okay? Using the exact same method I shared with you today, you could have gone short and taken advantage of this nice sell-off here coming into the year and exited with a 35-point gain using that technique to find your target, profit target. And look what happened after that. Here's an example in ADI, okay? A buy signal was generated and it started to go in our direction. But remember, using the method I taught with you today. Now, this is just one way to trade, but using this method, you would have formulated that, well, my exit should be here. So I've already applied the 50% rule, so I'll place my stop somewhere up here. So I have nothing to risk on this trade. And then look what happened. Some great news or something happened. Once again, it's funny how we already knew to be long this weeks before this announcement came out. And so since you had a limit to sell here, you would have been able to sell up here where the market opened on that gap opening to make 25 points before it started to sell off. Now, let's say you're not a stock trader. Let's say you trade currency pairs. Well, here's a 4-hour chart of the Canadian dollar just a few weeks ago. Once again, a strategy for a buy signal using the same method we would have formulated that our exit was right here. That's twice how much we're risking. And about a week later, we made 165 pips. So this is a great, great offer. Once again, I use this strategy on a daily basis. It's the Primo strategy number 4, the very first method that I learned from my mentors. Let's break this down. You're also going to get an extra bonus. Everything you've seen today has come from displays from our platform, the PTS Primo Charting platform. Now, we're going to offer you 1-year access to the PTS Primo Charting platform. All right, the complete course and rules manual, a PDF manual. And the strategy number 4 course is a $695 value, nearly $700. If we apply a full year of real time with the PTS Primo Charting platform, we're also going to charge $1,180, nearly $1,200. And this includes a scanner, so you can scan for nightly signals in strategy number 4. So normally, this would cost you close to $1,900. Here's the discount we have today. We're going to only charge you for strategy number 4, $695. You're going to save nearly $1,200. That's over a 60% discount. This is a great way to get acquainted with us. Nearly $700. You know, if you can't afford coming up with that for a one-time fee, don't worry. Pro Trader Strategies would be happy to establish a payment plan with you. So for a small deposit, you can still be up and running and still have our platform and apply this to your trading. And remember, this is a strategy I've been trading for over 46 years. I continue to trade on a daily basis. If you're struggling with your trading, take charge for the very first time. Remember, don't depend on others to find out how to trade. Take it from someone who did that 46 years ago. It doesn't work, okay? Trust me, I did that. I was taught the same way you were to find out what other ones, are thinking of the market, what they like, what stock they don't like, what's the perfect time frame. It doesn't work. For 2 years, I very rarely made a profit. You have to take charge of your trading. You have to make your own decisions. This is a great way to do that. Here's how to get involved with strategy number 4. Here's how to take advantage of that great offer. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts and all the tech support with the platform. I would recommend giving them a call at 310-598-6677. They can give you a quote for establishing a payment plan, or if you'd like, they can take your order over the phone right now, and you can be up and running with the strategy number 4 course rules, as well as the platform as early as today. We have a great tech support department, and they can take care of you and put it together for you really simply, okay? Now, I promised you I would answer any questions. So if you have any questions concerning what we went over today, the method I shared with you, please do not hesitate to ask. Just go to your question and answer box or go to the chat box, and I promise I will answer them to the best of my ability. Plus, I'll leave all this information up here. Now, you see this link below. I didn't mention that. That link below you see right here is the link that will take you to the info page and the sign-up page. We just posted a live link on the chat box. So all you need to do is go to the chat box and click that on, and it will take you to the sign-up page if you'd like, okay? Okay, so we see a question here. Can this work on other markets? Yes, I just shared with you one example of currency pairs, the US dollar, Canadian dollar, but we have traders who apply this to cryptos, to Bitcoin. We also have traders that apply this to commodities. Wherever this pattern occurs, and it occurs over and over again in any market, in any time frame, you'll see a strategy number 4 setup. So I don't want you to think like, well, this only works for stocks, but I trade other markets. Guess what? You'll be able to apply it to any other market you trade and any other time frame. So this is really, really a great offer because you're getting a strategy that can be applied to multiple markets and multiple time frames. Makes absolutely no difference, okay? Someone's asking, what if I have questions? Well, if you have questions, I'm not sure what you mean by questions. If you have questions about the pricing or or purchasing, just contact the number right here in front of you, 310-598-6677. But if you're asking, if you become a student of mine and you have questions, I will give you my personal email address. Each of my students has my personal email address where you can contact me whenever you like. So it's the next best thing to having me sit with you, because you can email me over the weekend in the middle of the night, and I'll answer you as soon as possible. Okay, so this is a great way to learn our methods. And you can also share with me chart examples. If there's something that doesn't make sense, I'll get back to you as soon as possible and answer all your questions. And remember, these emails, you don't have to worry. They don't go to an intern. They don't go to a sales representative. They come directly to me. Okay. What do I trade it on? Well, I personally trade strategy on the E-minis. Remember, I like to trade the intraday E-minis because of my schedule, teaching and trading, and also giving webinars. It makes it very difficult for me to look at longer term positions. So I like to get in and out. Plus, that's the way I was trained when I first started trading. I was an intraday trader on the floor. In fact, we held positions for maybe 30 seconds and then we got out. But that's just how I was trained and taught. So that's pretty much my method of choice. But remember, just because I use that doesn't mean you have to. And I don't want you to think that, oh, well, Steve intraday trades the E-mini, so I guess I have to. No, we have dozens of traders who traded on crypto. We have hundreds of traders who traded on currency pairs. And we have thousands of traders who traded on stocks. So feel free to trade and experiment with whatever market you want. Remember, you are in charge of your trading. Our job as an educator is to point you in the right direction and to provide you with things that have stood the test of time that show high levels of consistency. But we're not here to tell you, okay, buy this tomorrow, or if it breaks this point, sell it. No, that's up for you to decide. We give you all the information so that you can make that decision, okay? That's what a good mentor, that's what a good educator does. A good educator does not trade for you. He teaches you how to trade. So, as you've seen in today's educational presentation, that's been my goal. And as we have students in over 115 countries and in every state in the United States, we're happy to say that we have trained so many students into becoming consistent traders for the very first time. So come on board, take advantage of this great offer. And remember, there's absolutely no obligation if you want to call Pro Trader Strategies. 310-598-6677. The trading consultants are there to work with you. They're very flexible. They'd be happy just to give you a quote. And so it's a great offer, or they'd be happy to take your order over the phone if you're so inclined to purchase it right now. Right? Either way, I look forward to all of you becoming students of mine in the Strategy Number 4 course. As we close up here and take one last look, remember, take charge of your trading for the very first time. That's the theme of today. Now, I just want to share with you one last look at our disclaimer. Thank you so much for joining us today. Please apply those 4 separate edges that I share with you to any method, any strategy that you're currently using, and I really think you'll increase your odds for consistency. Thank you so much for attending today. I wish you all the best of luck and look forward to seeing you in the Strategy Number 4 course. Thanks. Bye-bye.